Hi everybody, this is Lara with your end of the week video for gold for the trading week ending Friday 27th of December. This will be the last video for 2019. A very happy new year to all of our members. The main wave count now expects more upward movement. What was the main wave count in last week's video has been discarded with a new high above 1514. The next target is about 1559, or we may use the big channel on weekly and daily charts, and I'll expect strong resistance at the upper edge of that channel. Elliott Wave counts first, classic analysis last. This is now the main wave count. It still expects that a cycle degree B wave is completing, and when it's done, it will still expect a big downward movement for cycle C to move below the end of A to avoid a truncation. The structure of cycle B is a double zigzag still. This wave count expects the second zigzag needs one final high before it will be complete. The first zigzag in the double, complete here, is labelled cycle wave W. The double is joined by a corrective structure in the opposite direction labelled X, and the second structure in supercycle B, labelled cycle wave Y, a zigzag subdividing A, B, C. C needs to be a 5-wave structure and should make a new high at least slightly above the end of A to avoid a truncation. The target calculated is still the same, but it may not be quite high enough now. At 1559, C would reach 0.382 times the length of A from this low to this high, but that would see cycle wave Y fall a little bit short of the upper edge of this big best fit channel, and so price may move a little bit above this target to come up again to test resistance at the upper edge of this channel. Draw the channel from this major low back here in December 2015 across this low here on a semi-log scale, this chart is, and then placed a parallel copy up on this high. That very nicely showed where last upward movement found very strong resistance, and we saw a multi-week pullback, and I will expect we may be coming to see another test of resistance at the upper edge of this channel in coming weeks. Let's take a look at the daily chart where this high for primary wave A within the zigzag of cycle Y is this point up here. Here's a zigzag for primary wave B, and now primary wave C needs to subdivide as a 5-wave structure. So far it may have 1 2 1 2 1 2, and now looking to see 3 4 3 4 3 4 5. If this short-term target for intermediate 3 is wrong, it may also be a little bit too low. This structure may need a little bit more room to unfold and complete another 1 2 fourth wave corrections before intermediate wave 3 could be complete. And also look out for a possible further increase in upward momentum and the possibility, not the certainty, the possibility of blow-off tops for one or more of minute 5 to end minor 3 or minor 5 to end intermediate 3. This wave count expects 1, 2, 3 as an impulse is coming close to completion in possibly another 3 to 5 weeks, and then 4, and then 5. Intermediate 3 may only subdivide as an impulse, and within it the correction to come for minor wave 4 may not move into minor wave 1 price territory below this price point. Keep drawing this acceleration channel as price continues higher from the end of intermediate wave 1 to the last high, and then placed a parallel copy on the low of intermediate 2. When intermediate 4 eventually arrives, the lower edge of that channel may show where downward movement may find support. When primary wave C has moved at least slightly above the end of A, then I'll expect possibly more upward movement to find strong resistance at the upper edge of this trend channel if price moves above the target, and eventually when the structure of primary wave C could be a complete 5-wave structure, this wave count will then expect a huge trend change at supercycle degree and a resumption of the bear market for gold. At the hourly chart level, here is the high of minuet 1 that you can see on the daily chart. Here's 2, and here's the middle of the third wave, showing strong momentum. Here's the middle here, corresponding with the strongest portion of MACD. Here's minuet wave 3. Minuet 4 may move a little bit further sideways on Monday when markets open. It may find support at the lower edge of this Elliott channel if it gets that low. It may be unfolding as a double combination, flat for subminuet W, the double joined by a 3 in the opposite direction, and a little zigzag to complete down for subminuet Y, may end about the same level as subminuet W, so that the double combination takes up time and moves price sideways. When this is a complete structure, then overall this wave count will still expect more upward movement. There will be corrections and pullbacks along the way. There will be 1, 2 coming up for minute 4, and then minor wave 4 after that, before the end of intermediate 3. A much more time-consuming multi-week correction will not be expected until intermediate 3 is a complete structure and intermediate 4 finally arrives, and I expect that could be some weeks away now. Minuet 4 may not move into wave 1 price territory, but it shouldn't get anywhere near that point. It should find good strong support at the lower edge of this channel if it gets down that low. At the weekly chart level, this is the bullish wave count for gold. It looks at the possibility that the bear market for gold was over at this major high in December 2015. How does the Elliott wave structure fit? Does it make sense? And the answer still is no. The biggest problem with this wave count is cycle wave 1. This does not look like a normal impulse for gold. Gold will typically exhibit time-consuming second waves and brief shallow fourth waves. It will exhibit this tendency in a bearish move as well in a bullish move. Here's an impulse for gold with a more time-consuming second wave and a more brief and shallow fourth wave. Gold does that because as a commodity it will typically exhibit blow-off tops and capitulation spikes, and that tendency is especially prevalent for its fifth waves to end its third wave impulses 1 degree higher. When that happens, it forces the fourth wave that comes just after to be more brief and shallow than its counterpart second wave, which gives gold's impulses a typical curved look. And the problem here is that the disproportion is the other way round, and it is extreme. Primary wave 4 covers a much greater distance in terms of price and is much longer lasting than its counterpart primary wave 2, giving this movement a 3-wave look. This does not look like a normal 5-wave impulse for this or any other commodity, but particularly for gold. That does still substantially reduce the probability of this wave count. And also, if you look at gold on a huge monthly chart and you look at the movement from the all-time high, I think it was September or November 2011, and that huge big downward movement that ended down here, that looks more like an impulse than it does as a corrective structure. And gold's corrections often, not always, but often have a really obvious 3-wave look. My main wave count sees it as A, B, C, and on the monthly chart, if it unfolds as that count expects, at the end of it, it will look like a really big, obvious 3-wave structure to the downside. This wave count expects that the bear market unfolded as a multiple zigzag, and that will fit, and sometimes zigzags and multiple zigzags can look and behave similarly to 5-wave structures. So let's consider all possibilities here. If gold is in a new bull market, then, despite the problems in here, this could have been cycle wave 1 of a new bull market. A double combination may have been over here for cycle 2. Zigzag, X, flat correction, subdividing 3, 3, 5. This is an expanded flat. And now a third wave may be underway. The target remains the same for cycle 3 to reach 1.618, the length of cycle 1. Cycle 3 may only subdivide as a 5-wave impulse. So far it may have primary 1, 2, 3 and 4 complete. If 4 were to continue any further, it may not move into wave 1 price territory. At some stage in the future, if we see a new low by any amount at any time frame below this invalidation point, I would then have substantial confidence in a bearish wave count for gold and expect reasonable new lows that would invalidate this bullish wave count and add a lot of confidence to the bearish wave count. And there's another illustration, another reason why it's always a good idea to use alternate wave counts when you're using Elliott Wave. Let's take a look at this now at the daily chart level, where the high for primary 3 is this point here, and here's a zigzag for primary 4, and now an impulse for primary 5 is expected to continue. So far, intermediate waves 1 and 2 may be complete. The target for this wave count is higher than intermediate 3 for my main wave count, because this wave count expects quite a lot more upward movement than my main preferred wave count does. The structure at the hourly chart level, at the daily chart level from this low here is the same. The degree of labelling is the same. They both have intermediate 1, 2 and 3 incomplete, but the targets are different. The invalidation point here is for minute wave 4, which may not move into wave 1 price territory. At the hourly chart level, these charts for the bull and bear wave count at this stage now look exactly the same. The only difference at this stage are targets. At the weekly chart level, this week saw quite a strong upward movement from price for gold, but it's very weak in that it lacks support from volume quite substantially. And I have taken a look back at the last few years for the week at the end of December, that week that encompasses Christmas, and it doesn't necessarily always have to have light volume. And so overall, the data in hand shows that we are getting some strong upward movement. Price remains below resistance, but it does not have support from volume. Very importantly, on-balance volume is still at resistance. Price is making new highs above these prior short-term highs, but on-balance volume is not. This is somewhat bearish. It suggests at this stage that upward movement may be more limited than the strength in price here suggests it could be. ADX is showing a slight increase. There may again be an upward trend, and it may already be extreme because the black ADX line is still above both directional lines. Price is rising and ATR is declining. This upward movement does not have support from volume or ATR. With the data in hand at this stage, this upward movement is weak. That could change. If resistance is overcome, energy may be released, and then we may see an increase in volume, but we have not seen that yet. With the data in hand at this stage, upward movement is weak, the trend is extreme, upward movement may be more limited than price is suggesting here. RSI is neutral. There is room for upward movement to continue, as the stochastics. MACD is bearish. For the short term, the target calculated from the triangle was not met. Resistance here was overcome, and also at the upper edge of this triangle pattern. Price is closed well above resistance here. There's a little bit of support from volume for the short term, but overall volume is still declining as price is rising. This break above resistance here came with a very small increase in volume, and so for the short term, look out for a pullback and a test of support before price moves up and away. On-balance volume gave a strong bullish signal. Back here, price is now moving up and away. For the short term, RSI is just now moving into overbought territory. It can reach further overbought before upward movement ends. Only when it's moved into overbought and then exhibits bearish divergence with price will I then expect upward movement to have a larger interruption. That is not the case yet. There is room for upward movement to continue. ADX indicates that there is an upward trend at an early stage at the daily chart level, but it's extreme at the weekly chart level. When it reaches extreme at both time frames, then the risk of it ending would be much higher. ATR is declining also at both time frames. There is weakness in this upward movement. Overall, weak volume and weak ATR. It may be more limited than price has suggested this week. Stochastics overbought and MACD bullish. That's all from me this week with your gold analysis. I hope all of our members are having a fabulous weekend and a very happy new year to you all.